Well, joining us now, Vincent Reinhart, chief economist at BNY Investments, and Carol Schleif, chief market strategist at BMO Private Wealth. It's great to have you both here. Vincent, I'm going to start this conversation with you because I was speaking to Loretta Mester earlier today on the exchange, and she said that she was a little surprised how straightforward Powell was in terms of signaling his willingness to cut rates next month. But she did also say she thought this would be a hawkish cut if we get one. What do you think?
I think she's right. I think that he was somewhat constrained in signaling easing at the September meeting because there is some data between now and then. And he also wanted to bring along his more hawkish colleagues by essentially saying, yes, it'll be data dependent, don't worry about it. As for the hawkish aspect of the cut, in September, they also put out their quarterly summary of economic projection, the dot plot. And so probably they'll couple that quarter point cut of the funds rate with a projection that suggests it's only pretty much shallow declines thereafter into 2026.
Carol, I want to get your thoughts on some of the commentary we got from Fed Chair Powell regarding the labor market, as he did stress the dual mandate and sort of balancing both of those moving forward. He talked about this curious kind of balance for the labor market, and he also said that the employment rate had increased by almost a full percentage point, a development that historically has not occurred outside of recessions. He did say that it appears to be in balance, but really sort of signaling that especially on the heels of that jobs report we got earlier this month, that it's softening more than they had previously anticipated. Do you see cracks here? Is this concerning?
Yeah, we've seen some cracks all year long in terms of at the margin, and I think his choice of, or his use of the word curious as opposed to delicate or balanced was curious in itself. It really is indicative of the fact, as he pointed out on a couple of different occasions and ways in this conversation, the fact that you've had a lot of policy change in very short amount of time in terms of trade policy, immigration, regulation, and tax policy, all changing at the same time, and understanding how those filter through the system and when they filter through the system and how they impact. He noted they impact both supply and demand, and it will be critical for the Fed to watch whether or not those impacts are short-term and cyclical, which the Fed and monetary policy have some influence on, or whether they become secular, if you will, or structural, which the Fed really can't control much. So there's a lot of moving parts. It's coming through in the labor market, and analyzing those and watching those numbers, understanding that growth in the labor market has been changed pretty dramatically by the immigration policy and by boomer retirements. And so you've got a lot of moving parts in there impacting that. And I think the Fed was trying to tee up that there's an intermediate and longer term story. Markets today, though, were just relieved that he wasn't telling a neutral story. He was coming down, at least for today, pretty dovish.
Yeah.